We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here on the Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
the show.
Let's go. Happy Monday. Welcome to the Rollup today. Fantastic show for you guys. If you're a little bit worried that the AI market is collapsing and robots are going to take over the world, you're watching the right show because we've got a privacy day today. Today's Q2 2026, July 27th, and today is Shielded Day. Shielded Day, we are going to bring you guys a tremendous slate of guests. We've got guys from all over the privacy ecosystem, and today is powered by Zama. Zama is our privacy partner. They are helping keep essentially the entire chain, the on-chain economy, and the entire asset market here confidential. We're gonna be talking about exactly what that means. We're gonna bring up a ton of tremendous guests. We've got Rand, who's the co-founder of Zama. Kyle O'Brien is gonna help co-host the show today, and we're gonna be going over a lot of what has happened in the world of privacy and Zama's world in Q2. These guys have a tremendous product, tremendous confidential privacy suite that they are pushing forward. We've had Rand on the show several times. He's told us about the partnership with T-Rex. There are trillions of assets that are going to end up on chain, and it's important. Privacy is important to every single one of them. We are also going to bring up, in addition to Rand and Kyle, guys from Pantera, guys from Flowdesk and Morpho. We've got Franklin from Pantera, Nico from Flowdesk, and Kirk from Morpho. And then we want to hear from you guys. We want you guys to tell us all of the questions that you want answered. And so we're going to bring up Kyle and Rand to do some Q&A at the end. You guys know Zama. I mean, we talk about them almost every show, and for good reason. Privacy is one of the categories that people are paying a lot of attention to these days. Paying a lot of attention to is another way to say that the token is pumping. So it's a tremendous time to learn about Zama, get involved in the community, hear how confidentiality works, and ultimately shield your assets. Today is Zama Shielded Day, and it is July 27th in Q2 2026. We're going to be learning all about Zama. We've got some tweets that we want to share with you guys to start off the show. Zama has been pretty front and center as of late because of all the things with privacy going on chain. So first off, and you guys heard a little bit about this, but we want to double down. Let's go ahead, bring up our first tweets. Zama confidential vault went live. Also, the RFQ system went live. And so trade on chain without revealing size, asset, or direction. I'm sure you guys saw Tushar from Multi-Chain put out these things. Everyone was tracking Multi-Chain. They said, oh, they unstaked their hype. They're going to dump all their hype. Hype actually, had a reaction to this. And so in the follow-up, Tushar and Multi-Chain, which is involved in the Zama ecosystem, came out. They said, look, this is why we need technology like Zama to help make all of these moves on chain confidential, shield these wallets so that you don't have this cohort of people that are watching these wallets and making arbitrary decisions about what these actions could mean. Obviously, everyone who's claiming what they know is about to happen is just entirely out of the loop here. And so large trades don't happen on chain. They happen in dark pools on OTC desk and over encrypted chats for a reason. And that's because using a public blockchain to swap means disclosing your strategy to the world, being front run and getting worse execution prices because of MEV. Anyone who tried to move size on chain has had to face this kind. So Zama introduces a solution to this, and this is confidential RFQ. And so look on chain here is describing what happened with Multicoin. They unstaked a lot of their hype. It appears they are taking profits, right? And obviously this was not the case. Multi-Chain and Tushar came out later on and said, look, this is part of regular, we're not selling any of our hype here, despite them making a $20 million profit on hype. And they're going to continue to stay in the ecosystem. But look, this is why it's important to have tools out here that protect privacy. They mean that investors don't get front run, execution stays very, very solid. And so this is one of the reasons why confidentiality is so important. It protects those large trades and what is ultimately happening on chain. This is the way that the world works. Off chain, it's important that these things are kept on chain as well. And so Zama here says that they are putting end to the tyranny of MEV by launching the first fully on-chain composable and confidential RFQ-based swap protocol. Here's the kicker. Every trade, size, and direction are confidential at all times. The Zama Confidential RFQ is now live in private beta on Ethereum with a public launch planned for September and multi-chain support soon after. The goal is to provide the best trading venue with the deepest liquidity, best execution for institutional investors while keeping things shielded and confidential. So there's a clear demand for this in the market. And this was rather, quick action from Zama to effectively launch this privacy preserving protocol and meet the demand that is present on chain. So let's keep cycling through. We've got a great show for you guys. Like I mentioned, Pantera, Flowdesk, Morpho, just absolute Goliaths in the on-chain space. And so it's pretty tremendous that we're going to bring them all together for you guys here today. And we've got a great run of show that we're going to get through, all of it powered by Zama. A couple more tweets that we want to show you guys before we bring up our co-host for today. It's not going to be Andy. It's going to be Kyle from Zama. Let's bring up our next tweet to get a bit more of an understanding about how Multicoin is thinking about privacy. Again, they were one of those primary benefactors from Zama's technology. Let's go ahead and roll the clip here of what Tushar is talking about with respect to privacy here.
It's so obvious to me that RWAs are coming on chain, right? You see that with Project Crypto from the SEC. You see that from all the big asset issuers, all the banks. Everyone wants to modernize that infrastructure, but I think it's ridiculous to think they're going to do that and broadcast all of their activity in real time to the public. That doesn't make any sense. Privacy is not optional if you're a large trader. It's not something you can risk leaking out there. People are very sensitive about information leakage. So what do you need? You need privacy protocols like Zama that then enable you to have the upgrade of the system that blockchains allow, but allow you to do so privately.
Zama is powering the private on-chain future. Visit zama.org to learn more.
And this is going to increasingly become a primary focus, I think, with AI just continuing to take a closer and closer look at everything. I mean, let's talk about in the state of New York, how they just doxed several hundred, if not thousands of people that are at risk, maybe just possibly liable to pay this tax. And then they just go and expose all of the addresses, all of the personal information. I saw some things that said this is already public information, but it was a very, very deep down a rabbit hole that you had to look. This makes it that much more accessible to just understand people's personal information, where they live, knowing that they have money, and that makes them targets for attacks. This is increasingly the divide between what we're seeing on a political front, as well as what we're seeing just time and time again when it comes to financial taxation, when it comes to the rights that we have. Privacy is a fundamental right. It takes important frontier technology to ultimately instantiate this right and protect each and every one of us. There are forces and powers that be that are trying to take these rights away, and they are, just blatantly doxing, people in broad daylight. It is important that privacy preserving technology exists, and so that people can take their rights into their own hands and protect themselves. So on a day, when Tushar and Multicoin got their wallet tracked and everyone thought that they were going to be dumping their hype, all the way to today, and the state itself is doxing people's addresses. It's just that much more important that we have privacy preserving technology. So it's incredible to see this happening on chain. Again, the casino funds the research lab. Some of the most important technological advances are happening on chain, and we're very grateful that they are. Let's just blitz through the rest of these, and then we're going to bring up our co-host for today, Kyle. So Tushar, obviously this has been what we've been talking about. Yesterday we unstaked a large slug of hype. We did not unstake to sell. This squashed any sort of FUD that was taking place from watching these wallets. This is why privacy matters. Our funds are constantly tracked, forcing regular wallet rotations. Institutions need privacy to operate. This is why we're long Zama and Zcash. This is, essentially the best way to express bullishness on privacy. So if you see what's happening in New York, if you see what's happening on chain, and you think there is a better way, technology is catching up and meeting the demand that people have for these privacy elements, and you want to express bullishness on this thesis, Zama is one of the best ways to do that. Tushar is saying exactly that here. Zama and Zcash, this is why they're long. They have exposure to these assets because these are the assets that are some of the best expressions of the privacy thesis. And you guys have heard us talking about this on the show several times. You'll continue to hear us talking about this. I think this is only going to accelerate in the climate that we have, sort of everywhere, but especially on chain. Guys, I see you in the chat. No CSM. Keep the comments and the questions coming. We're going to tally all those up. Any questions that you guys have, we're going to ask the Zama team later in the show. So definitely keep those ripping with us. The last tweet that we have comes directly from Rand, the Zama founder, who we're going to have up in a few minutes. It seems confidential staking and unstaking is a use case. Should we build it? Well, they went and they built it. These guys are shipping. Very cool to see. One of the teams that I think it's important we continue to pay attention to in the space. And the market is reflecting exactly that. Token is doing incredible things. And they're also doing really, really great things on what they're building and they're taking to market. So it's great. And I'm extremely thankful for their sponsor of this show and them supporting us at the Rollup. I think they know everything we do here is with a educational format in mind. And it's important to us that we maintain a lot of the ethos and principles that are core to this industry. So guys, we're 15 minutes into the show. We're going to bring up our co-host of the day, Zama Shielded Day Q2 2026, powered by Zama. We're going to bring up Kyle O'Brien from the Zama team. He's going to be kicking it with us and asking our great guests some questions. Let's go ahead and bring him up on the show. And yes, absolutely. Here he is, Kyle. There we go. Let's bring him up.
Amazing. Thanks a lot, Robbie. Appreciate you hosting us today. Listen, welcome to Shielded, Zama's quarterly institutional grade report covering confidential on-chain finance. As Robbie mentioned, I'm Kyle O'Brien. I lead protocol relations at Zama, and we've got an incredible show today. But first, I want to thank Andy and Robbie and the whole team at the Rollup for letting us hijack their stream. Big shoes to fill for the next hour. So you can judge me at the end of the show. Listen,
Kyle, yeah.
Non-stop at Zama, we announced our acquisition of Token Ops to enable confidential distribution investing contracts. We launched the first ever confidential USDC vault with Stakehouse Financial on Morpho. We expanded capabilities in the Zama SDK and app. We support more asset classes in the Zama registry, and notably, we hit nearly $500 million in shielded volume through the protocol. Stake circulating supply is at an all-time high, and it appears privacy season is alive and well despite the bear market that you were referring to earlier, Robbie. We're going to cover all of this and more with today's guest lineup from Pantera, Flowdesk, and Morpho. But to start, let's check in with Zama founder and CEO Rand Hindi with his take on Q2. Rand, welcome to Shielded.
All right, let's go ahead. I'm going to see you guys soon, and we're going to bring up Rand. And Kyle, I wish you a fantastic show. We'll see you soon.
Thanks a lot, Robbie. Rand, welcome. And he's coming up on the screen, looks like. Slight technical difficulty. There he is. Rand, how's it going? You're live. Amazing. Well, before we go into the formal report, I want to have a little back and forth. This was a really exciting quarter for us at Zama. I know there's a ton to discuss. But before we get into it, I want to put you on the spot. I want to ask you, what is the highlight that you're most proud of this quarter?
Well, I think the biggest highlight for me is launching the financial protocol on top of the core privacy protocol that we had, because I think we just showed to everyone that confidentiality and on-chain finance are indissociable from each other. And it was just a first launch, and there's plenty coming up soon. So yeah, I think that was a defining moment for sure.
Yeah. So I have another question, which is around privacy, no doubt. But I'm curious why you think privacy has prevailed as a key narrative, despite market conditions. Does it have anything to do with institutional adoption? Is it really that privacy is just the last frontier to conquer in crypto? Why do you think this has remained such a relevant topic?
Because I think people are realizing that for the past decade in blockchain, they've been told a lie. They've been told that the only way to use a public chain was to reveal to everyone everything you're doing. And now they know there is another choice, which is to use a public blockchain with all of the advantages, but without actually disclosing everything to everyone. And yeah, it's just a turning point. It's the moment where the technology works at a time where people actually need it.
All right, in just a minute, I'm going to hand you over the keys so you can walk through all of Q2. But before we do that, I want to ask you what you're looking forward to most in Q3. What's on the agenda? What's on the roadmap? What are you excited about launching?
More users, more TVL, just more of everything that we've been doing, frankly.
All right, great. So we put a lot of time and energy and care into packaging this report. So we're super excited about it, very proud of it. And incredibly excited for you to kind of shepherd it into existence here live on the Rollup. I'm going to hand the keys over to you. You can go and share your screen, and we're going to spend the next 10 or 15 minutes walking through what took place at Zama in Q2 via the shielded report.
Okay, excellent. All right. Let me share that now. All right.
If you're serious about crypto, this is where you need to be. The Rollup will be broadcasting live from the Rare Evo Expo floor on day one. It's July 29th and 30th at the Aria Resort and Casino in Las Vegas. General admission is free, so don't miss out. Hear from U.S. Senator Bernie Moreno, Stephen Gregory from Binance US, Brian Quintens from Kalshi, and Maggie Parsons from Lighter. Connect with industry leaders from Bitwise, Wintermute, Privy, and dozens more. Claim your free ticket today at rareevo.io. We'll see you in Las Vegas.
We get deep. We get deep. We get deep. Hot. You know we get deep. We get deep, you know we get deep. We get deep, hot. We get deep, you know we get deep.
Money, power, and money, power, and
Great. Hey everyone, welcome to Shielded Q2 Report, the update on the Zama protocol. I'm Rand, I'm the CEO here at Zama, and I'll be walking you through what happened over the past quarter. So just as a recap, Zama is a full-stack confidentiality protocol for on-chain finance. We enable people to use public blockchains like Ethereum and Solana to manage assets, trade assets, earn yield on assets confidentially without having to bridge to a different ecosystem. So the Zama protocol has three different layers. You have the privacy protocol, which sits on top of public chains. And then you've got the financial protocol, which uses those privacy tools to provide a set of financial primitives like confidential swaps, so earning. And then on top of that, we have apps and SDKs. So we had actually a lot of activity. By the way, those numbers are as of the end of the quarter, so June 30th. Things have changed quite a lot over the past month. So they might look a little bit outdated already. Perks of being in crypto, I guess, things move very fast. But the headline number I want to talk about is what we call total shielded volume. So the amount of money that moved through the Zama protocol. And we've reached over $400 million moving through Zama since the beginning of the year. And we already actually a couple $100 million more since the beginning of July. So things are picking up very, very fast. Shielded TVL now sits at around $40 million, which is materially more than it was at the end of last quarter and growing. We also have quite a lot of stakers. 1 in 5 Zama holders is actively staking, which is a very large amount of engagement. That represents about 63% of the circulating supply. So 2/3 of the tokens circulating are currently staked in the protocol. When you look at the distribution of TVL in volume per asset class, so we have 4 different types of asset class that we support in the protocol. We've got stablecoins, tokens, vaults, and RWAs. Stablecoins, USDT, USDC, and GBP stablecoins. Vaults is the new launch that we had this quarter. We launched a Stakehouse Prime USDC vault. We want to have also like a GBP vault. So overall, what we see happening is that stablecoins are becoming a main driver of usage of confidentiality through the ability to pay people in dollars or to earn yield on those stablecoins. But going forward, we're also expecting RWAs to become a big, big part of the usage of the protocol. So look at this slide and see how it evolves over the next quarter. Very important milestone, technically speaking. It's a milestone I didn't think we could achieve myself. So, it's to tell you, and I'm very optimistic, and this was a surprise to me as well. We reached 1,000 transactions per second, 1,000 TPS of confidential transfers on GPUs. 1,000 confidential transfers per second on GPUs. This is huge. We've always considered 1,000 TPS to be the moment where we can confidently say that, yeah, FHE is a done deal. We've solved the problem. We can basically move on from trying to talk about how fast it can go and just build all the use cases. We thought initially that this would require some specialized hardware. Well, it turns out it worked on GPU. And at the current pace of improvement, which is about 10x every couple of years, we are on track to reach 10,000 TPS in 2028 and 100,000 TPS of confidential transactions by 2030. To give you some sense, payments globally, Visa, MasterCard, ACH combined, is about 25,000 TPS. So FHE is already fast enough for most of blockchain use cases, and soon enough will be fast enough for global payments at scale. Something that we launched we're very proud of is the Zama app. If you go to app.zama.org, you now have a very nice user interface that allows you to interact with confidential assets. You can take any of these supported tokens and shield it. You can pay people, transfer tokens confidentially. You can deposit that in vaults to earn yield confidentially. And we just announced that you can now also swap tokens confidentially. So think of the Zama app as the front end that gives you access to the whole Zama ecosystem. All of this is also available through the Zama SDK. So if you're building a financial application or service, it could be a wallet, it could be a DeFi protocol, it could be a custody solution, you can actually integrate confidential tokens, confidential swaps, confidential vaults directly through the Zama SDK without having to worry about any of the FHE related topics. So I encourage you to actually use that to play around with it and see what you actually want to build. There's another topic which came up, which we knew was important, but really came up big time over the past quarter, is the importance of auditability of the shielded supply. This is one of the strong suits of FHE, the ability for anyone to publicly verify that the amount of shielded tokens corresponds exactly to the underlying token deposits in the protocol. What this means is that it would be impossible for someone to double spend shielded assets without this being immediately visible to anybody who wants to verify the integrity of the supply. And if we're talking about confidential finance, we're talking about trillions moving on chain, compliance and auditability are requirements for that to happen. And I think this is showing that FHE has a very unique positioning and is a very, very strong technology to enable exactly that. So let's talk a little bit about some use cases and partnerships. We've continued shipping throughout Q2. There's a lot of things that still needs to be done, but we've been effectively launching things pretty consistently over the past, 5 years, but particularly over the past quarter. For example, we announced the acquisition of TokenOps. TokenOps is a platform that enables distribution and vesting of tokens. Chances are, if you've invested in a token or received an airdrop, you've probably interacted with TokenOps with or without knowing it. They've distributed over $2 billion already. The reason why we acquired TokenOps is because we believe that vesting is a great way to build TVL into the protocol, because you're effectively onboarding shielded supply by enabling protocols to distribute tokens to their investors, to their team, to their partners, confidentially. And those confidential tokens which are vested are going to stay confidential for 2 to 4 years, which means that we can build utility for people when they actually start claiming them, for example. They can swap them confidentially, they can stake them confidentially. So we see confidential vesting as a great way to build TVL long term, and we are going to be relaunching TokenOps in the coming months with confidentiality end to end. Another big launch, probably one of the biggest one that we've done so far, is partnering with Morpho and Stakehouse to launch the first confidential USDC vault. You can now take your confidential USDC and you can place them in the Stakehouse Prime USDC strategy on Morpho. This is huge because it means that you have access to the same exact yield as you would with non-confidential USDC without having to reveal your position or stake in the vault. So we are now at over 25 million TVL, which makes this one of the top 10 USDC vault on Morpho. This happened far faster than we had anticipated, and I think it shows that people are excited about using confidential vaults. So look out for that. We have a huge strategy for confidential vaults coming up with a lot more products that we're going to be launching in the coming months. We also partner with Defense. Defense is a provider of wallet infrastructure for institutions, and they now support ERC-7984 confidential tokens through Zama, which means that anybody using Defense can now shield, unshield, and transfer confidential assets directly through Defense. Finally, we just recently announced that we are running a beta on mainnet for our confidential RFQ protocol. So RFQs are very important because it allows you to trade directly with market makers and fill effectively trades which would be too big to just be broadcasted publicly on blockchains. We can now solve that problem because you can put an intent on chain that is encrypted. Market makers would quote that intent without knowing the direction or even the asset that you're trading, but they still quote you. And then, you can settle with the winning market maker. So this is a great way to bring institutional order flow to public blockchains without having them risk being front run, being MEV'd, or just signaling their strategy to the entire market. I'm very bullish on that. Every single fees that we're going to be collecting through the swap is going to go towards buying back and burning Zama tokens. 100% of the swap fees of the RFQ protocol are going to go back towards buying back and burning Zama tokens. There are no front-end fees or anything. This is fully owned and operated by the protocol itself. If you have any other questions, you can reach out to me directly at RanHindy on Twitter, or you can reach out to Kyle, who's in charge of investor and protocol relations. Thank you, everyone.
Look, tons of stuff have taken place this quarter. We've got even more coming up next quarter. I think it's nice always to showcase our partners, but it's even better to bring them on stage and talk through what exactly it is we're building with them and what we're building for them. So we've got a pretty stacked lineup today. I want to bring up our first guest to talk a little bit about confidential investing and distribution. I think it's a problem that's near and dear to his heart. Franklin Bai is a general partner at Pantera Capital, one of the biggest names in crypto venture. I'm sure all of you have heard of him. He's been backing early stage DeFi, infrastructure, Web3 projects since about 2019, so he's been in the game for a while. I'm really excited to bring him on stage. Franklin, thanks for joining Shielded today. Franklin, welcome to Shielded. Thanks for joining us today.
Of course. Thanks for having me. And it's great to be here As you mentioned, on-chain privacy is something I've been working on for many, many years, going all the way back to when I was at JP Morgan, started the blockchain team there back in 2015. And it's kind of a full circle moment after JP Morgan actually built a POC on Zama. And it finally feels like we're at the precipice of on-chain privacy finally being able to go mainstream.
Yeah, that's incredible. Nice full circle moment for you. Well, at Pantera, I pulled some numbers earlier. You've got something like $3.5 billion of assets under management, over 100 early stage token investments. So you're no stranger to vesting and distribution, being on the receiving end. Can you tell us a little bit what it's like to be on the VC side of that transaction today?
Yeah, sure. I mean, the short answer is it's been rough. I mean, having been so early in the space, a lot of the things and sort of playbooks that we have to run are things that we've had to build ourselves. So all the way from when we first started in 2013, literally writing down secret keys and storing them in a vault, to now trying to figure out how do we handle having vesting schedules, investing information on blockchains that are transparent by default. So the way we've had to do that is actually really manual. We have to figure out how to obfuscate activity, how to make sure that when we make a decision, we want to be making a true investment decision, right? Are we deciding to buy, sell, or hold based on our conviction in the project, based on what we believe is going to happen in the long term? And a lot of the times, I think, I hear of other investors who have to deal with all this other noise of, hey, what happens when the markets see that the vesting schedule is going to play out in a certain way and that a token unlock is going to happen on a certain date? Suddenly, it's not about the investment decision anymore. It's about what is everyone else going to do? And that's kind of the classic prisoner's dilemma that, unfortunately, when you have that happening in a market, it's really unhealthy. I mean, that's one of the key things that can drive a market failure. And so, for us, it's been so important to be able to figure out what is the path to, having all the benefits of a blockchain for open markets and open settlement, but also making sure those markets are healthy, because the ability to conduct your transactions and be just a rational market participant through on-chain privacy is so important.
Yeah. Well, it sounds like you must have a few battle scars. Could you tell us a story about, I don't know, a vesting cliff gone wrong, a public contract that was monitored and, token dumped or something along those lines?
Yeah. I mean, there's a bunch, and I would say it's both our own battle scars and also what we've just seen happen to other investors too. I can think of at least a couple examples where I won't say the exact project name, but 3 weeks out, the unlock is about to happen. All of the trackers that you see out there around unlock schedules show that information. And at moments like this, everyone's kind of circling the wagons, right? I mean, all the investors are talking to each other, the founding team, the community, they're all trying to figure out, hey, what's going to happen when that unlock occurs? And in that type of moment, people just assume the worst and they start shorting. So you see this total sort of schizophrenia in the market where we're circling the wagons. We love the project. We want to keep holding that position for the next 5, 10, 20 years. And we're hearing the same thing from all the other early stage investors. But then in the public markets, you've got people suddenly starting to short the token. And so, I've seen this exact situation play out where the token just gets shorted, it starts to dump, people assume the worst, and then suddenly you're in this situation where none of the early investors sold a single token. Yet somehow the token is down 30%, 40%.
Sure.
And you go onto Twitter, and what people are saying is, oh, wow, I guess all the VCs dumped. And that's just so ridiculous because, this gap between the reality and the conviction in the market and what's happening just because of this, this thing that could have been totally avoided and really just does not happen in a healthy capital markets. the project just has to deal with it. And I would say it's quite unfair to the community and quite unfair to the founding teams to have to do that kind of damage control when the reality is they've been doing everything right, everything's going well, but it's just the nature of um, the transparent by default ecosystem that exists in blockchain today.
Yeah, it's a complete lose-lose situation, which is incredibly frustrating. You mentioned earlier a little bit about the operational overhead of managing your portfolio. The vesting and distribution is really just the first touch point in this kind of broader life cycle of owning a token portfolio. You eventually might want to move in and out of position. You might want to rebalance your portfolio. You might want to swap for other tokens. You might want to generate yield on the tokens you end up swapping for. I'm curious from an operational standpoint, token operational standpoint, you've probably got a team behind you doing this. How does this save you from some of that headache? If you could receive confidential tokens, you could swap in and out of them without adverse signaling to the market. You could generate yield on them. Does that change the game for you guys?
Yeah, I mean, it really does because, this whole calculus that we have to go through, it just shows up, every single day, right? We are lucky enough to actually have our own trading team, our own trading infrastructure, our own connectivity to venues. So you would think that, if we've invested those kinds of resources, that we should be, able to be as flexible as we want, able to take sort of the opportunities as we see them, and just participate fully in whatever investment we've made and really just be as great of a partner as we want to be to our entrepreneurs. And that's really what drives everything. But because, sometimes if the vesting schedule is being telegraphed just on a public chain, we have to make these suboptimal decisions, right? We can't participate in yield opportunities. We can't help support the liquidity environment fully. And that's because the market may see us moving tokens out of a wallet, out of an exchange, and assume the worst, when really we're actually doubling down. So again, it's it's the total opposite signal. And sometimes I hear the argument from folks on Twitter that, hey, blockchain is meant to create transparency, and this is great for the market that everyone can see what everyone else is doing. But then things like these come up and you say, well, no, this is not actually the desirable outcome for the market when people who want to do something can't do it because it's going to have all of these circumstantial consequences. So yes, I think the ability to conduct our trading more confidentially, to participate in yield opportunities privately, all those things would, I think, just help build a better market environment for everyone, not just us. And therefore, we can really focus on the things that actually matter.
Amazing. Well, you've been in the privacy game and an advocate for a long time. It sounds like this is a full circle moment for you, which is great. You've been a supporter of Zama for several years. So we're excited that you're still excited about privacy. I'm being told we're running a little loose on time here, so I got to transition to our next guest. Franklin, thank you so much for joining Shielded. Really appreciate the insights.
Of course. Thanks for having me, and love everything that Zama's doing.
Awesome. Take care.
Bye.
Next up, we've got Nico Nonnon from Flowdesk. He leads business development. Everyone here is most likely familiar with Flowdesk, right? They're the crypto, liquidity, and market-making powerhouse. He's on the front lines, keeping digital asset markets liquid and efficient. He's also a close friend and partner of ours here at Zama. Nico, welcome to Flowdesk. Welcome to Shielded. I like Flowdesk so much that I'm actually going to change the name of the report. Welcome to Shielded. Thanks for joining.
Hi, Kai. What's up? Thanks for having me.
Yeah, of course. Well, listen, for those of the folks in the crowd that aren't familiar with Flowdesk and aren't familiar with you, Nico, maybe you can give us a quick background on who you are. Tell us a little bit about where you sit within the Flowdesk ecosystem.
So yeah, I've been with the firm for like 4 years and something. We're just a 6 years old firm, so been a while. I've seen a bunch of everything. I looked after mostly BD, but also like new initiatives, like anything we do in DeFi. I'm sort of involved, investments, token market making, OTC. I mean, I just try and bring some money to the firm and new counterparties. Really, that's what I do.
Amazing. Well, the topic we want to cover today is around our new RFQ protocol. It's been an exciting announcement behind the scenes. We're working with a number of counterparties who are kind of helping us with the design process as we bring this to market. And you've been influential in that. I think maybe to set the stage, you can walk us through kind of the state of play today for RFQ or OTC desks. Like, what does that look like? How much of it is being done on chain versus off chain? Like, what is a typical experience for someone who's looking to sell something over the counter?
So typically, right now, you've got two different areas for the business. You've got the bilateral OTC stuff, which is done in crypto mostly over Telegram. A bit of over Slack for the most sophisticated companies, but that's mostly Telegram. And it's not really that fancy, actually. It's just a chat with a bot, and then people ask for quotes and they ping each other. They ask for price, they ask for firm quotes, they ask for all sorts of algorithmic orders, for bespoke executions, for spot, for derivatives, whatever. And then on the other side of the coin, you've got all of the on-chain RFQ stuff, which is trying to mimic an OTC transaction, but on-chain with an atomic settlement window. These two are somewhat the same, but they have like very distinct kind of like characteristics. And right now, I would say the most common workflow to educate kind of like the audience, if they're familiar with it, is just somebody like Kyle, you would come up to me in chat and it would be like, I want to sell 100 Bitcoin, and we would just get you a price. And if that price is good for you, you like it, you just confirm that you're done with it, and then all of the risk is transferred to us. So that's essentially, it's a risk transfer business most of the time, because you wouldn't want to push the buttons yourself on an exchange to keep it very. Sure. Yeah, that's mainly what it is.
Okay, so it sounds like a lot of the activity actually takes place off chain. You're talking about Telegram and Slack.
Yeah, most of it.
Yeah. And so I would imagine that's for a reason. Part of that reason is around privacy, right? Like early signaling and MEV, right? And so I'm curious in the current state of affairs, how much friction does this introduce to your workflow? I mean, is this a huge burden for a desk like yours to keep up with? And would there be a major advantage to having this fully on chain, assuming you could eliminate some of the negative signaling risk that comes along with it?
So I think the main constraints, you mentioned privacy, right? Which is fair enough. It's actually a big problem. Like we've got a lot of our wallets, operating wallets, that are tagged on Arkham and tools like that. They are just like operating wallets. They just have funds come in and out, omnibus style. But sometimes, some counterparty is sending tokens, and then they're like, oh, this guy is like sending tokens because they want Flowdesk to dump for them or whatever. So it's true that it's a problem. Even if you do it off chain, like your wallets eventually are bound to be tagged and flagged. That's that's the way it goes. But with on-chain settlement, you also eliminate some other type of risks, like settlement, counterparty risk, credit, which is actually one of the biggest problem in OTC, especially when you do it over Telegram or off-chain Wave. But the inventory requirements are a bit different. So I would say privacy is key, but also it's about inventory management and getting quotes executed quickly. With an OTC trade, settlement can take time, like hours, or maybe days, depending on the order, depending on the size. When you do it on chain, you eliminate a lot of the friction because you can have atomic settlement up to a point, right? Because if you're going to trade very large tickets, then you need to also take into account that some counterparties might not have that, readily available in a wallet. You can't have 2,000 Bitcoin in a wallet. Right? That doesn't work. So I think it's a trade-off. You have to really.
Okay, so I know that you are familiar with confidential tokens now. You guys have received confidential token deposits. You probably had conversations internally with compliance teams and the operational teams. I'm curious to get kind of two opinions from you. One is, what is the user experience like from a market maker with confidential tokens? I mean, is it distinctly different operationally, or is it relatively fluid? Is it easy to integrate into your process? And the second is, what do confidential tokens and some of these confidential financial products, something like a swap, for example, a confidential RFQ or a swap, or a confidential deposit into a vault sitting on Morpho, how does that impact your existing line of business? Like the customers that you're already working with, is this something that you think you could effectively, for lack of a better term, sell into them? Is this something that there's an appetite for?
Yeah, so confidential tokens, we've already used them a fair bit. So my operations team was not happy initially. I had to do a lot of convincing internally, both on the operational side and compliance side as well. Compliance is a big, it's key, it's critical. But when you get used to it, you start to realize all of the perks that it provides. Like you could be sending just a balance shielded, and then we would only have to unshield whatever we need to if we have to. But if the scope of activities that we can perform for ourselves on a prop basis or for clients is growing in the confidential space, then at some point I expect we might not even have to unshield anything. But it's fairly simple to use, really. Like, we're just shielding with the Zama app most of the time. And we just hope that one day most of the big custodians are going to implement, kind of like native shielding and unshielding, which is bound to happen, in my opinion, because there are just so many advantages. And I think the end game killer would be just exchanges enabling shielding and unshielding, and then shielded transfer directly. So you can just withdraw from like Binance or whatever, shielded, which is going to be a nice quality of life improvement for everyone involved in this industry. Bearing in mind that this is compliant by design, and this isn't like other alternatives in the space. And this has always been brought up by my compliance team, but we found a way to make it work. You can absolutely check the source of funds, and there are no compliance issues whatsoever with C tokens. So, and to your last point, I think a growing part of our customer base, they're kind of like warm to the idea, and I think it just takes time to educate them. And because it adds maybe one extra button right now, you just have to click shield and shield. But eventually this friction is going to disappear, and I think we can sell into a larger audience. So I'm very optimistic about the prospects for confidential tokens.
Amazing. Well, Nico, thanks for being such a good design partner and an advocate for confidential tokens. We're really happy to be partnering with you on this and the RFQ platform and all the other endeavors we have coming up. So thanks for joining Shielded today, and I will see you.
Thanks for having me. Bye.
Kirk Hutchison, aka the One True Kirk. He leads governance and multi-chain growth at Morpho, one of the top lending protocols in DeFi. Surely you've heard of them. Kirk, welcome to Shielded.
Thanks for having me, Kyle. It's a pleasure.
Super excited to be here with you today. There's a lot we can talk about, but I think the focal point for us today is around the confidential USDC vault we launched with Stakehouse on Morpho. This, for me, was a sleeper pick. I knew it was going to be exciting. I knew there was going to be some novelty to it, but we did not expect the response that we got from the community. So I want to touch on that in a minute, but maybe before we do that, you can tell me a little bit about where you sit at Morpho. Tell us a little bit about your day-to-day.
So I'm on the partnerships team at Morpho. Morpho as a whole very much has an enterprise or institutional focus. At the end of the day, the number of people who are clicking around on their own hardware wallets is fairly saturated, right? And we believe the next mile for crypto is all about scaling into existing distribution. And I think this is a very relevant topic for privacy because a lot of fintech will say, well, what do you mean all the user balances are public, right? So this is interesting for us on the partnerships team. Our job is to work with partners like Zama, work with chains and stablecoin issuers to facilitate this kind of B2B2B sales process.
Yeah, incredible. Well, maybe we can talk about one of those B2B2B processes, which was the vault we launched a little over a month ago. So, over the course of the lifetime of the vault, I think we've seen over 60 million in deposits. It's sitting around 20 to 25 million in TVL at the moment. It became a top 10 USDC vault. I'm curious, first impression from your side. What was your expectation before this, if you had one? And what do you think the kind of overwhelmingly positive reaction to this says about privacy features for Morpho?
So I think, we don't over-index on the short-term metrics, but what I'd highlight as impressive is that any new technology and new smart contracts always carries a risk premium for users to plug in. And I think this was a good show of confidence that people see that Zama takes security seriously. It's a show of trust, and it's a wedge for bringing this technology where it will ultimately matter, which is not, right now the vault has good rates, right? People are interested in that, but this is a proof that can then be taken to distributors who want privacy to say, look, this is live, it's liquid, it's been somewhat battle tested by the time they're thinking about bringing it to market, which is very exciting and useful for us.
Yeah. Incredible. So how do you guys think about privacy internally? So, this kind of first version of the vault was what we call a batcher, right? Where we're batching confidential deposits, unshielding them and aggregating, depositing them into the vault. The next logical step would be a fully native integration on chain, on Morpho. How do you guys think about privacy internally, and like what level of importance do you assign to it? Is it something that you view as potential for the roadmap?
So the way that I would put it is that Morpho, if people jokingly have called our UI Morpho scan. It's very detailed. Morpho ultimately is not in the business of building consumer products. We build tools for people to build consumer products on top of. So the way I think about privacy is, a customer-driven approach, where by a customer, I'm talking about a fintech. If we take an example, something that's not using privacy today, but what could be a type of use case for it. Deal launched an integration on Morpho on Tempo not long ago, and that category of fintech is exactly who we have in mind as caring about privacy for their users, and likely, as it matures and as it's proven in the market, to want to integrate Zama. And we would look at this as a collaborative effort where whenever we're working with a fintech or other partner who expresses a need for a privacy solution, we can, in a credibly neutral and objective way, highlight to them what is the available tooling. And if we could point and say, look, the largest confidential, privacy implementation on Morpho today is the Zama Vault, and so forth, that's something that we can highlight and support them in the integration.
Right. Can you tell me a little bit about the conversations you're having with Vault curators? I mean, this is a term that you guys effectively coined and has now become kind of the standard in the on-chain lending space. What are the conversations you're having with curators? Like, what are they most excited about, and does privacy come up in the conversation?
It certainly does, and I think there's been a lot of interest, as well as I do, that there's been quite a few curators who want their vault to be the next step after Stakehouse. I think all of them want to be able to point to something ready to go in their conversations with prospective integrators, because we and curators are the same. Right? At the end of the day, it's not about competing for the same dollars on chain, whether it's us versus other lending markets or curators doing PvP with each other. It's about closing distribution and bringing net new users. And we all see privacy as an important part of that toolkit. And one thing I wanted to highlight is why I think Zama is more powerful than some of the past privacy solutions that I've seen is that it can plug into the existing public liquidity. And this is critical, right? Like if you had to make a separate new vault that was private, then you're starting from square one. You need to find lenders, you need to find borrowers. Being able to plug right into the existing Morpho infrastructure means that there's no extra bootstrapping step, and it's an easy sell.
Yeah. Okay, so I want to close out on a prediction. There's been a lot of excitement. You've gotten a lot of feedback from curators. We're excited to deepen the partnership and expand our vault strategy, confidential vault strategy. What is your prediction for confidential vaults in the second half of the year? Do you see more and more strategies, more and more curators adopting the tech? What kind of TVL targets can we imagine?
Well, yes, I certainly see a diversity of curators adopting the tech. I will give a slightly boring answer to the TVL targets, which is that, sitting on the Morpho partnerships team, I'm looking at enterprises where we're talking about a 6 to 12 month cycle from the first conversation to them bringing a new product live. So we don't care so much about what it looks like in 6 months. What we care is who is going to lock in to build a product on top of it within the next 3 to 6 months that will ultimately scale to billions in liquidity. So that's what we're excited to work on. We are confident that there will be billions, double-digit plus billions of fintech capital flowing into DeFi over the next 1 to 2 years, and that's something I think privacy will be increasingly important. The closer you get to institutions like banks, the more they care about this. So the people who are on chain today are not representative of who will be the biggest adopters of this kind of technology, in my opinion.
Yeah. Incredible. Well, that's a nice place to close. Thanks a ton for joining, Kirk. Really good to speak with you. We're excited to work with Morpho and all the vault curators in your ecosystem. So let's see what the second half of the year brings. Thanks for joining Shielded today.
Thank you for having me. Appreciate it.
Cool. Kyle, man, how do you feel taking over the stream today?
I'm feeling good. I like my job at Zama, but the more I think about it, if you got a role opening up, I might apply.
Well, we've got your boss on the screen. That's not the right time and place.
I didn't see Rand was there.
Oh man. Well, we've got some Q&A for you guys. It has been a tremendous stream. I've been watching here behind the scenes. Rand, could you give us a quick test? Make sure we can hear you before we do some Q&A.
I'm here.
There we go. All right, cool. It's been incredible. And anytime you hijack, you're in for a bumpy ride, right? I think that's just normal. The one thing that I see in the chat here that people are extremely excited about. I mean, I know we've talked about RFQ, we've talked about vaults, we've talked about a lot of exciting things with privacy. People want this multi-chain. There's Solana moon boys in the chat, and they're like, when Zama on Solana? So, Rand, can you just talk us through, obviously the bigger question that everyone wants to know is when, but there's a lot of intricacies that go along with that. Maybe you could just tell us, why it's a technical thing that you guys need to decide and how you plan it out. What goes into making a multi-chain deployment? What are the considerations? And ultimately, when can we expect this to take place?
Sure. So I think, we're very excited about bringing this to Solana. Kyle Samani, obviously probably the largest Solana bull ever, is sitting on Zama's board, right? So I've got a board member, who's literally the biggest promoter of Solana, I would say. And we're very close to, the Multicoin guys and everyone. So Solana is coming. The thing about Solana is you don't launch something small on Solana. When you launch on Solana, you got to launch something big. And big means a lot of throughput capacity. It means a big use case, something that's actually going to get people to trade this on Solana like they would other things there, right? And so, we only have one chance of launching there. And so we want to make sure that when that happens, we do it with the absolute best possible conditions. So what does it mean in practice? We've talked about reaching 1,000 TPS on GPU. We need to put that on mainnet before we can hope to achieve anything on Solana. I'm not going to launch Solana without at least 1,000 TPS. It just, it would be respectful of the Solana community if we didn't give them the kind of performance they're used to. So that's number one. Second thing is we have to rebuild the whole protocol from the ground up to be SVM, and that means the core privacy protocol, but also all of the financial primitives that we built as well. It's not hard, it's pretty easy to build for Solana. It's just a different ecosystem with a different set of constraints. Storage cost on the SVM is much more expensive, and we have to rethink a bit of those assumptions. But all this is being solved, and I don't want to give you an exact date. All I can tell you is soon.
Okay. Well, that is telling. And it seems promising. And I think it makes a lot of sense the way that you think through, rather the somewhat easy technical consideration, which for so long it was like, okay, these are engineering problems. We need to figure out what are the design choices, what are some of the technical considerations. I think it's pretty indicative that the Zama team is cracked, and these engineering considerations are actually the easy part. The more difficult part is the go-to-market strategy. Yeah. It's getting to 1,000 TPS, and then it's ultimately bringing a fantastic product, because you're right, you only have one shot to go live the first time. And so doing that the right way is of extreme consideration, and that means being very, very thoughtful. Rand, next question here for you is from bullrun@moon.btc. Pretty incredible username handle there. He says, hi, Rand. Thank you for building Zama. In your opinion, where do you see Zama in the next 5 years? Do you believe it can become the global standard for confidential smart contracts across all major blockchains?
Our goal is to become HTTPS for public blockchains. We want every financial transaction, every stablecoin payment, every trade, every vault deposit to be done confidentially using Zama. And I do believe that this is going to be a winner-takes-all market, because the more liquidity is shielded with Zama, the easier it is for people to actually swap and trade and use Zama. And so it's a race to who's going to become the biggest shielded liquidity pool, effectively, in on-chain finance. And we've got a pretty good head start. I would say today, I think Zama is probably one of the biggest privacy protocols already. But that's not too hard considering how small privacy DeFi is at the moment. The competition is not as big as TradFi would be, but this is changing. So look, I'm going to tell you something that many people are kind of afraid of saying, right? But at some point we have to say it. If we believe that finance is moving on chain, it means we're talking about trillions moving on chain. Okay, we have to stop talking billions, man. Like this is small potatoes, right? We have to talk about trillions now or nothing. Otherwise, what are we even doing here, right? So if you want those trillions to move on chain, and you want to do that in a way that's confidential, you need the technology and a protocol like Zama to actually exist. So for me, it's very clear. 4 or 5 years from now, either 95% of financial transactions on public blockchains are encrypted using Zama, or we actually failed something, or finance has not moved on chain. But honestly, for me, it's going to be 95% of financial transactions. That's my goal.
And it does really feel like there's a wealth effect here, where more capital gets shielded, and it begets more capital getting shielded, because there's more of an economy of shielded assets, and it just continues to flywheel and grow.
Exactly. Look at HTTPS on the internet. There was plenty of people who proposed a confidentiality protocol for the internet. In the end, HTTPS won because it got standardized, which is what we're doing with ERC 7984, and it won because it got adopted, right? And at the end of the day, adoption is all that matters. We spent 6 years making a technology work, and now the only thing that matters is getting people to use it.
Rand, 2 more questions here. I got one. I'm going to save that one for the last. And then, okay, so this one, should we expect Zama hardware in the future?
A year ago, I would have said immediately yes. I think now GPUs have proven to be a lot more powerful than we had anticipated for FHE. My initial thinking was that it would require at least FPGAs to get to 1000 TPS, but we achieved that on GPUs a couple of years faster than we thought we would do it on FPGAs. So it seems that the Moore's law of FHE is even stronger than I have anticipated. And keep in mind, I'm the most optimistic guy in the room, right? And even I did not anticipate how fast FHE would grow in performance. This is insane. Like, the cost of an FHE transaction on GPU today is less than $0.00001. It's free. Like, done, it's free, right? Now, where dedicated hardware is going to become important is for low latency use cases. I think throughput, we're going to get it with GPUs. Throw more GPUs, you'll get 100,000 transfers per second. Latency is where you need ASICs, dedicated hardware. If you want to be able to fill an encrypted trade in an order book in 1 millisecond, GPUs are not going to get us there, right? We're going to need dedicated hardware. So I think the difference between Zama using GPU and Zama using specific hardware is going to be just the number of use cases we can address. Payments, institutional order flow, RFQ, all of that we can do on GPUs. Low latency, high frequency order book trading on chain, confidentially, you're going to need dedicated hardware to get there.
Very cool. Zama potentially playing in the world of atoms. All right, Rand, this is the last one. It's a fun one. And it's a pretty retail friendly one as well. Yeah. People are asking, why is Zama token up today?
I think there is a general sentiment that everybody is realizing now is that privacy is non-negotiable for finance to move on chain. And obviously we've been saying this for a while, but it's very different when we say it and when it kind of becomes apparent. A few days ago, Multicoin, one of our biggest investors at Zama, unstaked some of their hyperliquid tokens, right? This got flagged on social media. Multicoin unstaked some hype, and then people are like speculating about what Multicoin is doing. By the way, Multicoin is a long-term investor in everything they're doing, right? So I'm sure they had very good reasons for doing that. But nonetheless, people freaked out. And Tushar basically just said, well, now you actually understand why Zama is building something important for blockchain. And it's just like, there are moments where people just understand the scale and importance of a technology because it just blows up in front of them. And it's just a beginning, right? I think it's just a beginning. So look, I think we have to focus on doing one thing, which is build more utility, focus on getting people to use the protocol, more confidential assets, more vaults that people can earn yield on those confidential assets, more liquidity for the RFQ protocol. Like, we need to make the Zama protocol the best place for institutional investors to manage, trade, and earn yield on chain confidentially. And I think if we do that job right, and all of those fees funnel into buying back and burning Zama tokens, then the market will decide whether this is valuable or not.
Yep. Rand, you said more than most token founders do. So appreciate that. And appreciate you sharing all the insights today. Kyle, thank you so much for co-hosting, man. And
absolutely
giving me a little bit of a break on the hosting side.
Thanks for letting me intern. Happy to do it.
Absolutely. The newest Rollup intern. No, you guys are crushing it over there at Zama. Rand, Kyle, really, really appreciate you guys. Thanks for hijacking the stream today. And congratulations on a fantastic quarter too. This has been Zama Shielded Day. Thanks so much for joining.
Thanks, Robbie.
Thank you.
Thanks, everyone, for joining.
We'll see you next time, guys.
If you're serious about crypto, this is where you need to be. The Rollup will be broadcasting live from the Rare Evo Expo floor on day 1. It's July 29th and 30th at the Aria Resort and Casino in Las Vegas. General admission is free, so don't miss out. Hear from U.S. Senator Bernie Moreno, Stephen Gregory from Binance US, Brian Quintens from Kalshi, and Maggie Parsons from Lighter. Connect with industry leaders from Bitwise, Wintermute, Privy, and dozens more. Claim your free ticket today at rareevo.io. We'll see you in Las Vegas.
We get deep. We get deep. We get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Money, power, and money, power, and
You know we get deep. We get deep, huh? We get deep. You know we get deep.
If you're serious about crypto, this is where you need to be. The Rollup will be broadcasting live from the Rare Evo Expo floor on day 1. It's July 29th and 30th at the Aria Resort and Casino in Las Vegas. General admission is free, so don't miss out. Hear from U.S. Senator Bernie Moreno, Stephen Gregory from Binance US, Brian Quintens from Kalshi, and Maggie Parsons from Lighter. Connect with industry leaders from Bitwise, Wintermute, Privy, and dozens more. Claim your free ticket today at rareevo.io. We'll see you in Las Vegas.
We get deep. We get deep. We get deep, huh? You know we get deep. We get deep, you know we get deep. We get deep, huh? We get deep, you know we get deep.
Bang, bang. There we go, guys. Zama is up. I think Zama's up like 17.5% today. Pretty fire show. Like, we heard, I mean, Pantera, Morpho, Flowdesk. That's a pretty star-studded lineup right there. That is a cabal of sorts. And Zama's flying. Honestly, Zama and ETH are probably the two, and probably Pump Fun. It's a weird market out there, guys. Like, now is really the time when winners are made. And it's time for the men to separate from the boys here, because I mean, if you look out there, it's not like everything's like moving at the same time. You know, not everything's moving in unison. We don't really have like a super friendly macro environment. And the lack of forward guidance is basically telling us that, hey, we don't know what's going to happen in the next Fed rate cut. I think we're at like 70-30, no change versus rate increase, which is significantly more opposed or unpredictable than things have been in recent history. So we don't really know what the Fed's going to do. The macro environment's a little bit unpredictable. The war is unpredictable. And we're seeing things go up, but things go down too. Meme coins are doing well. Majors are doing well. It's like a very barbell type of approach. I've been taking the approach here where, I mean, look, you've got like these secular driven markets. Like, we know that privacy is going to get a bid. It's happening. I mean, I think if you look at what's happening in New York, they're doxing people's homes. Like, that is going to cause people to take privacy into their own hands, take it a lot more seriously. And look, I mean, Zama is absolutely leading the way. Zcash, again, leading the way there. So we're seeing this happen. You've got, you know, the AI cohort as well. And then broadly, what seems to be happening is that you've got these major assets that are doing particularly well. Bitcoin is seemingly holding up. ETH, I mean, I'll go out on a limb here and say that Bitmine, Tom Lee's Bitmine, is the top performing DAT right now. And I think after all of the shenanigans that Michael Saylor has pulled with strategy, Bitmine is in a position where they are now the pinnacle of digital asset treasury companies. I think Tom Lee has executed in, I mean, you could say, look, you could have waited to buy the absolute Pico bottom, but not even Tom Lee, not even Michael Saylor, no one is able to just do that. You know, these guys are human. right? But the capital allocation strategy has been one where they've been able to steadily buy all the way down, retain enough cash, right? They have this income product that they're probably going to, but they started really slow, which I think was an extremely prudent approach. And they're going to ramp it up as time goes on. And it's not like they put themselves in a position where, they raised a bunch of cash, sold a lot of this income product, and now they're on their heels, and they have to scramble and try to find the cash in order to pay this dividend. Not the case. They're in a really, really favorable capital position. And I think this puts ETH in a very favorable position as well, because remember, these treasury companies are just taking capital, taking supply off of the table. This may not have a really influential buying pressure, upwards pressure on the price right now. I don't think they're going to be able to offset or counteract any sort of headwinds. But the thinking is that once the tide turns and these markets are, transitioning from a bear to a bull or a bear to a pre-bull, the lack of supply on the open market is going to allow the liquidity conditions to just take off. And that is what I think these digital asset treasury companies are actually in a position to do. I think BitMine is one of the few that has realized that. They are consistently on sides, just buying. When the price just gets hit harder than most days, they're in a position to buy. They have plenty of cash. They don't need to scramble. And they're in a really good position. And so I think BitMine, I would actually give BitMine the award for the top performing treasury company thus far. Still a long way to go, but I think they're in an incredibly favorable position. Guys, we've just got one or two tweets, and then we're going to get into our daily equity, and then we've got a Clarity update for you guys. So let's get Novogratz up here. He's got a word on Clarity. I want to listen to what he has to say before we bring Rebecca Rettig, the CLO at Jito Labs. Let's play the clip.
I think the Clarity Act is going to pass. I do. And I know right now it doesn't feel like it at all, but I think it's going to be a last minute, small little compromises. You just need a small compromise on ethics. And I think that ethics compromise is going to look like what they did with Lake and Riley, where they said the state AGs can't sue congressmen or the president, but they can sue the DOJ if they don't think the law is being applied appropriately. And they're going to call it the Lake and Riley clause or something. And that will be enough, I think, to get both sides to say, that's a tough enough ethics bill. Let's pass this thing. You heard it here.
So
I think
that he thinks it's going to go through. Him and Scaramucci are just up there, just chopping it up. I mean, this is what happens when boomers get into crypto. These guys just got so much money. They are certainly incentivized for this Clarity vote to go through. I think Novogratz does bring in a nice little piece of financial regulation lore, as he says that they've done this before. This is a compromise that can get both parties over the line. And, they're in a position where none of the state attorney generals would be able to sue people that are involved in this. Ultimately, I think that is what they are looking for from an ethics provision. But, man, I mean, if we're just checking... if we're checking the prediction markets here, what do we have on Clarity? What do we have on Clarity? I mean, this is just, it's do or die time. We know if this doesn't happen by August 10th, we've got 2 weeks. 38% chance. It inched up a little bit. It wasn't looking good even after the ethics language came out. How much volume we got here? Only $2.7 million of volume. People just aren't sure. This guy says it's not as dumb as that big, beautiful bill, but it's pretty dumb still. By far the worst U.S. admin in history, even worse than the one during first Trump term. Since now we literally don't have a single competent person in the leading admin. Never happened before. Okay. All right. How do you really feel? I think it would be good for crypto. Obviously, I mean, there are people out there that still want crypto just to exist in the Wild West, but this is getting, this industry is getting suited up. So that is what is ahead of us. All right. What do we have next? The other thing that is in a position to get regulatory attention here is perps. We have seen this We've also seen how there's been lobbying groups in DC pretty consistently. And they're talking to the CFTC Innovation Desk. They're talking to the SEC Innovation Group. There is a ton of workshopping and learning that's being done at these levels. So I think ultimately this is healthy. I think it is beneficial for governments, regulatory bodies, to have a better understanding of the technologies that exist out there. Maybe we don't get legislation, maybe we don't get these things codified into rules, but I do think everyone upgrading their mental models for the technology that exists, the investor access that can be obtained, is ultimately going to put us in a better position when it's time to establish some investor protections. For now, this might be the Wild West. Whether we get this or not does influence how much institutional adoption we see. And that's going to be all across the board. I mean, Clarity is like this, far-reaching, it's got these 5 pillars. Like there's several pieces that make up the Clarity Act. One of them is going to be perps. And so here, I think we can dig into perps a little bit. There's a particular section of this podcast that we want to play. Let's go ahead and play the clip between David from Bankless and Vlad at Lighter.
That you founded, correct?
That's correct.
Yeah. Tell me about just how the spark came to you about like why Lunch Club was a good idea.
Well, I think a lot of even if you just if we think about our conversation right now, I think it's pretty clear that connections are very important, right? Like sometimes just like even a single connection can change the trajectory of someone's life or career. In some cases, an industry, right? Like how much value was created from Peter Thiel meeting Elon Musk in '97. The industries we know that this happens all the time, right?
Right.
So the idea was like, okay, well, but this stuff is all random. People just happen to meet. Like, there's all this data on the internet. Now we use this data to shop. We use it to listen to music, to find recommendations for movies, for content to read. Why not use it as a way to like do really valuable networking, right? To making the right connections. But so that idea was kind of. That was the mission, but the implementation detail that made it work, or at least made it work as well as it did. Because there have been others that have tried this kind of stuff, right? That didn't really go anywhere. But I mean, for us, it worked pretty well, especially during COVID. And even since then, it's like plateaued. It didn't die. But the key insight on the implementation side was like, how do we avoid adverse selection, right? Because if you have a system where you use like the model from dating sites, where you're like, okay, like double opt-in. That doesn't really work too well for networking, because unlike dating where there's like somebody for everybody, like in networking, it's like if you could send requests to anybody, like it's like, I don't know, Mark Andreessen would get like 1 million requests.
Right.
And someone who's like a college kid might not get any.
Right.
Even though what should happen is the college kid who's thinking about biology maybe should be matched with a college kid who's thinking about AI, and they can make the next great AI agent for healthcare.
Sure.
But like that's the kind of connection that should happen.
And like an extremely insightful thing here that Vlad is talking about, and if anyone is unfamiliar, he's talking about actually the predecessor to Lighter. For anyone who's unfamiliar, this company that he's talking about, Vlad founded Lunch Club in 2016. It's an artificial intelligence platform, AI, for curated professional networking and smart introductions. And so what I think I just find fascinating here is that this is fundamentally very similar technology to Lighter. And you might think, how is like an AI LinkedIn similar to Lighter? But it's just matchmaking. There's bids and asks, right? And they're able to create an algorithm, and in this case, use AI to matchmake between orders or matchmake between, professional people that are looking to connect with other professional people. And he talks and he tells a story about Elon meeting Peter Thiel and how that has created quite literally trillions of dollars of value across the combined, PayPal and SpaceX and all these companies that these guys have founded. So it's pretty fascinating stuff. And Vlad was, a founder of this company, and it's actually the same company, just transitioned it. It evolved into Lighter. And so I think, we don't always understand the level of generality that some of these founders are thinking at, but ultimately, what do we have here? We have pattern recognition and, instantiating that into a protocol. And that pattern recognition algorithm is true for, he mentioned dating apps. It's true for, professional networking. It's true for orders on a marketplace. And so quite literally, this matchmaking algorithm is the same thing that has now, been the core of Lighter. And it's been, order flow, and it's been order books, and it's been all these things. So shout out to Vlad. I think he's doing an incredible job. And I just think Perps is going to continue to expand and evolve as a market class, which is pretty phenomenal. And he's doing an incredible job. Guys, we've got one last segment before we bring up Rebecca. We're going to do a quick daily equity, and then we're going to get into Rebecca Rettig from Jito. So let's go ahead, run daily equity, and we'll see what's going on in the equity markets today. Doesn't look good. All right. Daily equities here. Guys, the NASDAQ is looking pretty rough. And today is July 27th. And the war is on, and then the war is off, and then the war is on, and the war is off. And then, AI bubble has burst, and then, it's AGI. And so we are just totally flip-flopping. The market is totally unpredictable right now. The Kobayashi letter here says that the shocking stat of the day is that foreign purchases of U.S. equities are up to a record $850 billion over the last 12 months. The figure has more than quadrupled since the start of 2025. This shows just an absolutely enormous foreign interest in the U.S. stock market. I think people have seen how the U.S. government is prioritizing the U.S. stock market over the U.S. bond market. And you've literally seen bonds crash. Yields are through the roof on the 2-year, the 10-year, and the 30-year. And so as the yields are upwards of 5%, that means bonds prices are crashing, yet the stock market is just continuing to just push new highs. Again, how sustainable is this? We've been of the mind that this is actually more sustainable than not, but it is concerning to see what is happening out there in things like the NASDAQ and some of these industries. NASDAQ looks pretty rough. If you're looking at it on the 1 year, it looks like it's ripe for a correction. It looks like we might have another 6 to 10% down before we start moving up. And so I do think what we're going to see here is that, who is the buyers of, the U.S. equities market abroad right now? It's usually large institutions, right? It's foreign hedge funds, it's sovereigns, it's these sorts of things. We haven't quite gotten to the point where we've evolved this capital base into, foreign retail investors investing in the U.S. stock market. That's to come. And so when we think about the foreign interest has now quadrupled in the U.S. market. But that is still not quite just the individual investor. They have not yet been empowered. That is what is happening next. As all of the institutions abroad have now gotten their fill, they're going to be looking for exit liquidity. Unfortunately, that's just the nature of the game. There's still a lot of gains to be made. The next step here is tokenizing these equities and expanding access to the individual investor abroad so that they can also take part in the U.S. stock market. Obviously, we want this to happen at a point where there is plenty of gains left. I think in certain categories that is still the case, but that is what I think we're going to see next. Once we talked about how the U.S. equities market has been effectively, it's at ownership highs in the U.S. Now in foreign markets, there's 4 times as much ownership abroad in the U.S. market. Now I think the next step is going to be the individual investor abroad, foreign individuals that are going to get into the U.S. stock market as well. And I think the vehicle in which they do that is tokenized U.S. equities. And so obviously Denari is in a position where they stand to benefit from this, along with the rest of the leaders of the tokenized equity class. And we've seen quite a few do extremely well as of late with this. Guys, that has been the Daily Equity segment. We're going to bring up our first and last guest of the day after a tremendous Zama shielded day. We're going to bring up the COO and CLO of Jito. Rebecca from Jito is she is going to be answering some of the questions that we have about the Clarity Act. And so we are extremely excited to be talking with her. We're going to bring her up in just a moment as we get her ready backstage. And she's been at Jito as COO and CLO. And I think there's plenty happening, as we talked about earlier in the show. I mean, this is do or die time for the Clarity Act. I think before the August recess is when we really have to get this done. And so it's an exciting time. Rebecca, as I said, CLO at Jito Labs. She leads legal, compliance, and policy strategy in the Solana ecosystem. She previously served as chief legal and policy officer at Polygon Labs and general counsel at Aave Company. So she has had quite the circuit in the space. And before crypto, she was a financial litigator. So no one better to talk about the Clarity Act and talk about some of the legal happenings in the crypto space. Rebecca, we've got you on stage now. Welcome to the show.
Thanks for having me. Good to see you.
Absolutely, good to see you too. Thanks for waiting. We've been on a roll today, so it's been a good Monday. I'm curious. It is your first time on the show. Maybe you could just tell us a little bit about your day to day these days. I mean, Clarity Act ramping up. As someone who's COO, CLO of a Protocol Labs company, how much are you planning for Clarity Act to go through? You're reading through some of this language and you're thinking to yourself, okay, if this goes through, we're going to need to do this, get this license, do that. Or is it like, hey, we're not really going to do much until this thing goes through and just kind of continue operating business as usual? What are you seeing on the ground there at Jito Labs?
Yeah, that's actually a great question because I circulated a copy of the updated combined 600-page draft of the Clarity Act and actually got a lot of questions from people about what are we going to do about this? What are we going to do about that? And some of it is you have to plan, but some of it is wait and see. I think the other interesting part about Clarity is there are an unprecedented number of rulemakings. So what Clarity does is it lays out the framework for how things should work or how things will be treated. And then it gives a lot of authority to the SEC and the CFTC to create specific rules for compliance. So yes, you'll have to do a lot of disclosures for tokens. There's a big section on that. All the section numbers have changed since they merged the banking and ag pieces. But so the first part of the bill talks about disclosures around tokens, and we're going to have to wait for the SEC to do rulemaking on that. So there's not a ton to do day to day yet, but you called out my Aave days early on. And when I was there were maybe 2 people doing policy on the DeFi side and everybody else was from centralized exchanges. And so I got to do it then with the Uniswap CLO. So that having been through 6-7 rounds of market structure, that you can't plan until the bill actually passes. So obviously keeping in touch on calls every day about it. But otherwise, not changing our business strategy yet.
Got it. That's actually very insightful, given that you guys are a big labs company here. And, I think others are watching the show and they're looking at this and trying to figure out, how quickly should they move. So very helpful to hear how you guys are thinking about things. I've got questions about where things are headed, where we're at now. But first, could you just give us a quick status update? Because you mentioned Senate and the Ag Committee. Some of these things have just evolved, and I know the ethics language came out last week. Prediction markets are still putting this at like 38% to go through. And I found it surprising that even after some of that ethics language came out, they didn't really move. It seemed like, there was some people that have been optimistic, they stayed optimistic. Others have just stayed pessimistic. Feelings didn't really change even after that ethics language came out. Can you give us a bit of a status update? Where are we? What are some of the progress moves that have happened? Ag Committee, ethics language. How important are those, and how much further forward does it put us closer to ultimately getting this thing through?
Yeah, so I actually think 38% is pretty high when it comes to thinking about passing a bill. The other interesting note is that maybe a month or 2 months ago, congressional staffers were banned from using prediction markets. So you don't have people who really know what their bosses are thinking participating. Also, depending on the prediction market, maybe U.S. persons are not supposed to be on there. But you don't sort of have the specific information that's necessarily flowing in from a day-to-day perspective. I also think that there's a line in DC that a bill dies, 7 times, 9 times before it ever gets passed. And I actually think that 38% is high. I've been at around 35% for the last 6 to 9 months, honestly, because there are a ton of hurdles to jump through. It's not that if we get a vote on the Senate floor next week, it will even be a substantive vote. It may just be a procedural vote to move the bill forward to a substantive vote. And so there are a lot of genius. I spoke to Senator Hagerty a couple of weeks ago and said, you made it really easy. You made it look really easy to pass the Genius Act. And he said, you can't imagine the work we did behind the scenes. But I think there was this critical mass of belief around stablecoins. And so it was an easier bill to pass. That's a 60-page bill as compared to this 600-page bill for clarity. So there's that. As you noted, last week, the combined text from banking and ag came out. It included very specialized language on ethics. No matter what people say about it, it is actually unprecedented to have this types of ethics language around a very specific asset class come out. There are continuing discussions behind the scenes with a number of Democratic senators about getting to an even better place on the ethics language. And I think if we can get there, it will be a real shame and an enormous miss, and actually a miss on a win for Democrats to make clarity get across the line. I think one of the things that is missed a lot is that this is actually a really hard bill to comply with. It actually goes to your first question, like, what are you doing to comply? It's not going to be easy. And, I think there is some meta around Democrats in DC that says, well, if we put a bill forward, we're legitimizing the industry. It's a relic, but it still exists, sort of that thought process around it. And I think the real answer is, it actually makes it much harder for industry to progress quickly and to outpace traditional finance if we have a bill like this in place. When you do not have regulation in place, I think we've seen that crypto is more risk on than TradFi is. So we're going to keep seeing that. And this, I think, puts crypto in a sort of even playing field with TradFi in many ways.
Yeah. And there, like you said, there are people out there that want this to continue to be a Wild West, but typically those are the people that are out there for sort of questionable reasons. Those who are out there that want this to go through are intending to comply with it and, like you said, legitimize a business and run legitimate businesses, which I think ultimately does put us in a much more mature industry and a much more reputable one as well. And I think it would clear the way, but I'm actually curious about your thoughts on this. My speculation here, my inclination is that this would clear the way for institutional adoption. And I realize that's a broad sort of hand-wavy term, but when it comes to banks coming in, doing tokenized deposits, or, New York Stock Exchange, other stock platforms have talked about 24/7 settlement. They're running research and development programs for blockchain, tokenized equities and tokenized assets. Are we in a position where the bottleneck to those programs is fundamentally the Clarity Act, and getting this thing through does sort of open the floodgates, if you will? Or is there something else that's holding those things up? Or there's nothing holding them up? It's just a matter of time.
Yeah, I actually think those types of programs are just a matter of time, and getting regulators comfortable with seeing certain types of instruments on a blockchain or digitized in a way that's totally new. This bill deals with tokens, selling tokens, launching tokens, disclosures around tokens. It actually has DeFi provisions, how we deal with sanctions on the front end and sanction screening, how TradFi can plug into DeFi. And then it has a whole section on how digital commodities intermediaries need to register with the CFTC. For what the banks are doing and what a lot of traditional financial institutions are doing, it just is a new way to do old types of instruments and old types of generalized financial transactions or actions. And so that's just going to take time working with regulators, which all these traditional financial institutions are doing now. I think your question, though, goes to the heart of how fast will traditional financial institutions want to move, and how much capital are these institutions putting behind these pushes? You can see Morgan Stanley has a head of digital assets. Bank of America just hired somebody. But other banks are waiting to see what happens with Clarity before they put the full weight of their resources behind it. So I think that's where the difference is. But I don't think this is going to stop the, TradFi era that crypto is in right now.
Okay. But there are banks and there are financial institutions that haven't put full resources behind it because we don't have this legislation in place.
That's right. But I don't think it's going to change what they actually could do on the ground day to day if they worked with the regulators.
Got it. Okay. And so that was actually my next question is, when you sort of gave us that status update, you mentioned that, this Clarity Act would extend additional powers to the regulators in terms of compliance, if I heard you correctly. My understanding is that this law would essentially codify a lot of the market structure and irregardless of the administration that we have in the office, this would remain the law. The regulators right now are issuing guidance, but maybe you could talk to us about, what additional powers are given to the regulators through the Clarity. Where do they navigate? What are they not able to do now that they could do with Clarity in place?
Great question. So I think there are a few different pieces to it. One, the Clarity Act is legislation. It is written laws. It, to your point, can never be changed unless it is challenged in the Supreme Court or in the courts from a constitutionality perspective. So that will be the law of the land, and it won't change. And you're right, it doesn't change from administration to administration. There's guidance, as you noted, that is not binding. Hard to know, can you really rely on it? You would if you went to a court of law, and sure, a court would probably say you were right to rely on it, but rules are also, the agencies all have the ability to promulgate rules now. We've seen the CFTC put out what's called a notice of proposed rulemaking on prediction markets. We've seen that from the SEC in the past on things like communications protocols and exchanges and the like. So they can do that now. Those can be overturned from administration to administration, but it is extremely hard. It's not the law of the land in the same way, but it is rules that people must comply with in order to be in compliance with the laws. And there's a whole long process. There's an economic analysis. Those can be challenged in court too. But the Clarity Act would really lay out what the SEC and the CFTC and the Treasury Department would have to put out notice of proposed rulemaking on. Agents, the industry and anybody else would be able to give feedback on the proposed rules, and then the agencies have to put them in place. So it's a normal process that happens all the time. We don't pay attention to it as much as normal, but this is something like 40 to 50 independent rulemakings, and it's a lot. And when you think about the last major piece of financial legislation in the Dodd-Frank Act, which was a long time ago, they're not even finished with their rulemakings. And as we heard last week, the Genius rulemakings, I think, were supposed to be done on the 1-year anniversary, and those are not finished either. So it is very hard to do rulemaking.
Okay. Well, that is helpful as well. So it extends when ultimately a lot of the provisions of the Clarity Act would go into place, because getting this thing through, is going to instantiate into law, but we actually have to make and execute all of those rulemakings. And as you mentioned from the Genius Act, we're still not done with those. Yeah. And so even, if Clarity does go through, those rulemakings could take years to roll out.
That's right. There may be some interim guidance on how to comply before you get the rules put in place. And there are, of course, timelines in Clarity for when the agencies have to roll out the rulemakings and have to be finished with them. But it's a difficult process. It's definitely not easy, and especially when you get tons of industry feedback. And I would say AI probably makes feedback even more vast these days. And you really have to show that you've taken everybody's responses into account from the agency side.
Yeah, makes sense. Just a bit of a more general question here. What do you think are some of the biggest wins in the Clarity text? As someone who's representing a protocol, and you've represented several across multiple different blockchains, both the DeFi side primarily, but essentially, the blockchain side as well, kind of all across the docket. So you've seen the way that these protocols operate. A lot of them have had this, split DAO equity structure as well. What is it in the Clarity Act that you think is going to be the biggest help to the on-chain industry?
Well, I think we can, that's a great question. It codifies a lot of what we're doing today in terms of how do you sell tokens and giving us information about how to sell tokens. As I said, the SEC will have to do rulemaking on that, but it'll make it a very legitimate way to move forward. We've seen it with VCs, but I actually think it will make at least certain tokens more investable and concrete, and move them maybe more out of the retail side and into the traditional side for people to think about what to do with tokens. I also think it's a huge win for the exchanges and the OTC desks and things like that to have a real registration path forward and not have to be under this strange patchwork of money services businesses laws, which, go from state to state. But I think it's really just, I think it's I was thinking about when you said who's it a win for, I was thinking who's it a win for, right? Like it is a win in some ways for the industry, and we all clearly see it that way. But when you think about who is it a win for, like, and not to be super cheesy about it, it is a win for like the US economy and US consumers because you actually know what you're engaging in. And in my view, I certainly think people in Congress should be viewing it that way. Like, as I said, it's not easy to comply with, not just from a token disclosure perspective, but this is the only set of laws in the world that touches DeFi, period.
Okay.
And so this is going to be tough. It's going to have lots of new compliance obligations. Treasury is going to, I mean, the other thing that is a big win is, we've talked a lot for many years in the industry. Oh, it's decentralized in name only. And we've been calling things DeFi that have control mechanisms. Treasury has a rulemaking authority under the Clarity Act to define when there's control and when there's not. And so really to cut a line for what we consider DeFi and where people may have regulatory obligations for on-chain finance. So this is a very difficult bill. And we've seen this happen in Europe with MiCA, where you put laws in place and it actually makes it harder for industry to move forward quickly.
Right. And that's something that I think the industry ought to be aware of. And I think that's what you're indicating as well, is that our industry, I mean, especially early in its days, we were breaking things, moving fast. It was an industry made up of cypherpunks that were used to sort of this anarchist, libertarian, code is law type of framework. And they could move as quickly as the law, or excuse me, as quickly as the code would allow them to. And especially with AI now, that means extremely quickly. Yeah. And it sounds like this would really put on some ankle weights and slow the industry down a little bit, and maybe for good reason, because it would enforce some compliance, but it would slow down the industry in terms of some of that innovation. And so maybe that would be the part of the industry that would continue to operate offshore, and that would be sort of the experimentation grounds. But then we would also hopefully get this very robust, very legitimate, accessible industry, part of the industry as well, that would allow us to understand what we're operating in. And I do like the line in the sand that Treasury would have, the ability to say, this is decentralized, this is where control lies. Yeah. Because I mean, frankly, I can understand how people that are off chain, not really accustomed to these things, they just want to trust that this thing is legit. Yeah. For someone who's on chain, like, we sort of know that legitimacy is a blurry line, and decentralization is one line where we can draw and sort of say, all right, if it is sufficiently decentralized, it can't really be gamed. It's not able to just, someone can't just take control and arbitrarily decide what to do with it if it is sufficiently decentralized. So that makes a lot of sense. And I think there are some rules that even us technologically inclined innovators, we like to see innovation, but there are some of these things that we would like to see enforced.
Yeah. And to your point on the wins, there is a preservation for self-custody and recognizing that as an inherent right. I think that's obviously very important. The other thing that is good for the industry, I don't know if we call it a win, but it is a codification of law, is something called the Blockchain Regulatory Certainty Act, or the BRCA, which it goes to what we were just talking about. It says if you are a non-controlling software developer, so you don't have control over user assets, you do not need to register as a money transmitter. That is the line that FinCEN has been drawing for many, many years. I'd say a decade, but people may, tag it back to the 2019 guidance. But I think that's very good because there has been at least some use in the past by prosecutors of trying to put that in touch to shut down DeFi. And so I think that would be a very helpful point as well.
I remember that, people were a little bit concerned whether that meant wallets. It could mean aggregators, exchanges, venues that were just potentially just AMMs, just decentralized exchanges. But there was some question on whether or not they were included in this money transmitter license regulation. But you're saying if Clarity goes through, that wouldn't be the case if you're not custodying funds, and most smart contract protocols do not custody funds. Most of this is self-custody. They would not get wrapped up in that?
Well, the line is not custody. The line is control. So even if you self-custody, if there is control over the protocol, you're not going to get the coverage from the BRCA. And so it goes to this part of the bill that I was talking about where Treasury could define what is a controlling versus a non-controlling developer. So if you fall within the non-controlling part, you do get coverage from BRCA. But even if it is on-chain finance where you're using self-custodial wallets, but there is control over the protocol, which means you can take user funds at any time, whatever Treasury decides is the line in the sand, you don't get coverage from the BRCA.
Got it. I could also see how that could mean like some of these actively managed vaults as well. You know, that would certainly indicate that they have control. You might be, self-custody, you can withdraw from the vault, but while you're deposited in, they can manage maybe amongst some whitelisted assets.
Yeah, that's so tricky to figure out. And this is what I've been grappling with for so long, having been in DeFi, which is, if you do have control, what are you from a regulatory perspective, right? Are you a trustee? Are you a fiduciary? Probably neither of those things. So this is actually something we need to be able to progress DeFi vaults, moving DeFi or on-chain finance into institutional use cases. I think it'll be really important for that.
Yeah. And that is where I think there is, this industry is poised for a lot of growth, but I could understand why institutions might be on the sidelines kind of looking from the outside in because they don't have that guidance quite yet. So this is an important part that is, kind of short circuiting some growth at this point. As we're talking about some of the nuts and bolts here, I also wanted to follow up on the token disclosures that you mentioned and how you particularly mentioned how this seems like it could be a win for Democrats and at least from my point of view, and I'm not in DC, but it seems like Democrats are the ones that are, holding this up. Is that true? Is it the Democrats that are holding this up? I think it is. And if so, why do you think token disclosures is particularly a win for Democrats that they could be leaving on the table?
Oh, I think clarity in general is a win for Democrats from a customer protection standpoint and from a, U.S. economic standpoint of view. I think, and this is a political tactic, not a Republican or a Democrat tactic, but everybody is trying to get the most they can for what they believe their constituents care about. And I think you can't fault either side for doing that. And there are a few red lines that Democrats have, a few red lines for that Republicans have. But I think ultimately people want to get to the right result, which is one, putting together a bill that hangs together and makes sense, and two, that moves the industry forward in a way that gives, good guardrails.
Yeah. In this 600-page, bill here, would you say, are there things that just don't belong? Like, I understand it's intricate. There's a lot of nuances when we're talking about who has control, who doesn't, where the rulemaking comes from. But I've also heard just stories, when these bills come through, it's like, politicians maybe slip in, we've got maybe a military package, but they slip in a healthcare thing or vice versa, right? Healthcare and you slip in a military. So would you say there are things in this gigantic bill that just maybe it's a little questionable? Why are those things in there? Is that holding things up when we don't really need it in there in the first place?
No, not in the same way that you're talking about. I think what you're talking about is something like the NDAA, which is the National Defense Authorization Act. That goes through every year. It has military spending attached to it. People know it's going to move because it's pretty necessary, although it didn't move this last time because there's been so much politicization in DC right now and a lot of hyperbole and people going to both sides. But, people will tack on bills that they want to have moved with these certain bills like the NDAA. Right. There may be one or two little things peppered in there that we'll see get cut out in the House potentially. But one, people aren't really super focused on those. The staffers in the House are focused on things they might want to have excised when it comes to the House. But this is really a very crypto-focused bill. And you don't see things like, animal rights provisions being tacked on into the end.
Okay, that makes sense. I think that's going to be helpful to get this thing through. And, it seems that we've got 10 days, right? That's effectively what we've got before the August recess. How real is that deadline?
It's pretty real from a procedural standpoint. I don't think anybody expects there to be what's called a cloture vote this week. That's the procedural type of vote that I was talking about, where people say, okay, we think there are enough votes to move this bill to the floor. People don't like to move bills for substantive votes to the floor. Leader Thune certainly does not want to move a bill to the floor. That does not look like it is going to get a full amount of votes. And look, it didn't the first time on Genius. And then Senator Hager has been very public. He said to the leader then, give me a week, I'm going to get this across the line. And he did. And then they came back, they had another cloture vote, they had the procedural votes, and then it got across the line substantively. So I think all we really want before the August recess is a procedural vote to say it should move forward. And that's really important. There are actually a few procedural votes that we'd have to get through, but I don't want to bore everybody with those details. So I think that's really important to have by next week. And then when we come back from recess, we'd go through and have some of the substantive votes.
And what I hear you saying is that if we get the procedural vote sometime in the next week or so before this deadline, the expectation would be we would come back from the recess and the substantive vote would go through as long as we get the procedural vote in the next 10 days.
Hopefully, as I said, a bill dies a number of times before it ever becomes law, but I think everybody is hoping that we see a procedural vote before the August recess.
Okay, and what would you say are the things, what's holding us up from getting a procedural vote?
Ethics, for sure.
Okay.
And then I think there are still some concerns around the Blockchain Regulatory Certainty Act and whether we need to make any amendments there. That's been a big piece of it. The other interesting piece that people haven't talked as much about is that the tribes have been pushing for potential provisions relating to prediction markets. And this bill does not touch traditional derivatives. So it doesn't touch perps, it doesn't touch prediction markets, it doesn't touch the CFTC's current authority. All it does is give the CFTC new authority over crypto spot markets. But the tribes are seeing this, as I was saying before, everybody is using this as an opportunity to exert leverage. So there's been some of that in the background as well. But I don't think that ultimately the prediction market question is going to hold things up.
And when you say tribes, you're talking Native American tribes that are currently running casinos across the country, and they're sort of looking at the prediction market space as a potential infringement on the gaming industry.
That's right. That's exactly right.
Okay. And so are they trying to include some regulation in the Clarity Act to keep the prediction markets and the perp markets at bay?
Yeah, a little bit. So definitely the prediction markets. I don't think the tribes are as concerned about perps, but they want to have some language in there because there are these developer protections for things like writing code, running validators and nodes, like very heavy technical work that is scoped out of the regulatory perimeter that's captured in Clarity. And there's been discussion around whether decentralized prediction markets, and really I think they're looking at Polymarket, but probably other ones that are online on chain, and saying we don't want those to be captured by these developer protections that are in the bill, either on the spot side or on the equities side. I know.
Yeah.
DC is a funny place. The things that you don't expect to have happen. But look, I do think that we forget that just as we have interests and we're a constituency of a number of people, there are all sorts of industries out there who see this touching them. Yes, we saw the banks and we're like, oh yeah, of course the banks are coming because they know we're coming for them. But people have seen the expansion of, the digitization of finance, on-chain finance, whatever you want to call it, and seen the threat that it poses to existing businesses.
And would you say that kind of the approach that the incumbents are taking, whether those are the tribes or the banks, they're sort of trying to stave off the DeFi industry as long as possible? Do they maybe see that it's inevitable? They're just trying to buy themselves time so that they can roll out their prediction market offering, or the banks can incorporate some of their blockchain finance aspects as well? Or are they just trying to permanently ban these things?
Well, we just saw right before this, it was announced that the CME rolled out single equity futures in a 24/7 way. So, and we saw the CME sue the CFTC over perps, about a month ago or so. So I'd argue that everybody's trying to buy themselves some time or exert maximum amount of leverage to get things that they think will protect their business or keep their moats in place. And I would say you can't really blame people for doing that because people are used to their businesses operating in a certain way for decades. And so they see the threat that the changing world is bringing to them.
Yeah. Wow. Rebecca, I think that's about it. I'm sure we could, continue to talk, but in a couple hours, there's going to be more news that comes out of DC, and then we're going to have to, do this all over again. I'd love to have you back on before that deadline and just, make sure that we get a chance to catch up before this ultimately, hopefully, fingers crossed, goes to the procedural vote.
I know. Well, happy to be here anytime. Thanks so much for having me.
Awesome. We'll see you next time. Thanks so much, Rebecca.
Bye.
All right. Yeah, 38%. Like we said, not too much volume on those things, and who knows? Those aren't too close to the regulators or the legislators themselves. Anyway, fascinating stuff. And she makes a great point. Rebecca's fantastic. I mean, her and Solomon from Plume, you know, they're both just super knowledgeable. I mean, they spend a lot of time in DC. Rebecca's been all across the docket, Polygon, Jito, Aave. So like DeFi, blockchain L1, DeFi L2, like just, you know, Solana, Ethereum, really, really expansive awareness of everything that people are looking for on chain across all the chains. So very cool to hear her perspective. And she brought a lot to the table. I mean, you know, you guys heard about the ethics language, you heard about the token disclosures, you heard about some of this blockchain, you know, control regulation, which some of this, you know, even as an on-chain native, I would be looking for, because, you know, we don't have some of the most sophisticated technology out there. There's private companies like Chainalysis that are actually doing the labeling, right? So they know, you know, who, you know, there's 30 wallets and, you know, there's 30 different people voting on this governance proposal, but really they all are owned by the same person. There's one person voting on this governance proposal. Like, there are some very questionable activities out there when it comes to portraying decentralization and creating this decentralization theater. And if we could actually, you know, have some sort of control on that, it would be helpful to get a better understanding, a more clear understanding of where things actually stand in terms of how decentralized they are. So that would be super helpful. I'd love to see some of that, but we won't until the Clarity Act ultimately does go through or not. Guys, fantastic show. Shout out to Zama. They powered most of the show today. Zama shielded day for quarter 2 of 2026. Appreciate you guys rocking with us. A lot of you guys in the chat have done absolutely fantastic with us. Keep rocking. And man, we're going to keep it up, guys. You're going to want to tune in pretty much every day until Clarity goes through or not. Seems like that could be a pretty bullish catalyst to get us off of this floor. Also, war in Iran or not, we'll see. And plenty of things happening. So don't go anywhere, guys. We'll be back same time tomorrow. And we'll keep bringing it to you guys real every day, every time. Take it easy.